Coming up today, Johannesburg online crippled as hacker demands Bitcoin ransom. HSBC to embark on job cuts across Middle East, North Africa. And IMF forecasts Ghana GDP growth to rise about 7% in 2019. Thank you for joining us and welcome to Business Incorporated. I'm Chimize Obi Iwagu. We'll begin in South Africa, where the city of Johannesburg's website has been hacked and a group is demanding a ransom in bitcoins. The city shut down its billing system as a precautionary measure after it detected a network breach which resulted in unauthorized access to its information system. In a message posted on the city's website, a group called Shadowkill Hackers is demanding a ransom in 4.0 bitcoins. The hackers have threatened to upload all hijacked data on the internet by October 28 if their ransom is not met. The incident is currently being investigated by security experts, which have taken immediate and appropriate actions to reinforce security measures and mitigate any potential impacts. Meanwhile, the Johannesburg Stock Exchange is safe as trading is ongoing as usual. At intraday, the index was down 0.34%. Here in Nigeria, the NSE All-Share Index slipped to 0.78% at intraday. The Kenyan bourse ended its final hour of trading on Thursday up 0.41%. And Egypt is closed for the weekend but traded positive on Thursday. In the Middle East, markets are closed on Friday as the weekend starts on Thursday. However, at the close of trading on Thursday, the markets were positive. The Abu Dhabi and Dubai indices both finished their trading day up 0.22% and 0.14% each. The Qatari Stock Exchange rose 0.22%, while the Saudi Exchange edged higher at 0.33%. And in Europe, stocks are cautious as investors digest a fresh round of corporate earnings as well as expectations on China-US trade talks. Well, Chelsea will feed us in from the Frankfurt Stock Exchange. Hello, Chelsea. Good afternoon. Thank God it's Friday. Right. So U.S. and China trade officials are expected to resume talks today about a trade agreement reached earlier this month. What are investors hoping to see?
Investors are going to want to see some of the promises that were made 2 weeks ago whenever the U.S. and China announced this trade pact. They're going to want to see that put in writing. So over the past couple of weeks and in the coming weeks, U.S. and China are going to try and put all this down onto paper and come to an agreement that can really work for both sides. The key point of this agreement they struck was about $50 billion worth of agricultural products that China is supposed to be buying from the U.S. in exchange for the U.S. dropping some tariffs on Chinese imports. It's been over the past couple of weeks, there's been a lot of talk over whether China actually plans to follow through on that $50 billion number. They have never bought that much in American agricultural products. It's not really clear where they would find the demand for that. So we're going to want to see more detail on that. We're also going to want to see the details of some of the more sticky issues that were included in the announcement of this. Things like changing some of the rules around intellectual property. That's been a really big sticking point in these negotiations because the U.S. feels that China is taking their intellectual property. They've mentioned that a little bit. We're going to want to see more details. They've also mentioned a currency pact. The U.S. has been highly critical of China's currency policies. They say they use the yuan to boost their trading influence. They've mentioned coming to some sort of agreement on that, but they haven't given details. So at this point, there's still a lot for these for the U.S. and China to work out. And this is really just the first phase of what Trump has said could be a 3-phase negotiation over the next probably year at least. So there's still a lot for the U.S. and China to figure out.
And of course, we've seen a number of corporate earnings, coming in. What are companies saying about how the trade tensions are impacting businesses?
There have been several reports this week. It's sort of the heat of earnings season in the U.S. and also here in Europe. And there have been a couple that stood out to me personally were Caterpillar, the U.S. Equipment giant. They mentioned that the slowdown in China is impacting their sales. They are sort of seen as this bellwether for the global economy, and they also are highly exposed to China. They sell a lot of equipment there, and they've mentioned the struggles they're having there. Also here in Germany, BASF, the German chemicals giant, biggest chemicals company in the world, they've also mentioned how the trade tensions are causing a rise in their prices, and also it's weighing on their sales as well. So this all sort of adds into this data that we've seen. Things like capital spending, business investment, which are sort of high-level indicators of how businesses are spending and how willing they are to invest in their businesses. Those have all been pretty weak, and one of the big reasons is because people are really cautious now. They are really hesitant to spend money because they don't know what's coming down the line with these trade tensions and tariffs.
And finally, some better news about the German economy. Now, a report on German business confidence released today, Friday, was better than expected. Does the economy appear to be stabilizing?
It does, and this is really the first sign that we've gotten over the past several months that the German sort of decline is maybe bottoming out here. This was a sentiment indicator. It's how you sort of ask companies, how are you feeling about now and also about the future? And in this report in particular, the expectations number was better than people had expected. So especially in the manufacturing sector, the industrial sector, businesses seem to be sort of signaling that they expect things to get better. And the head of the institute that put out this survey was talking today about how things like the reduction in tensions between the U.S. and China, and also the seemingly lower chance of a no-deal Brexit, are making people slightly more optimistic. But at the same time, we do still have a lot of concerns here in Germany. Just yesterday, we had more data on manufacturing orders, which was pretty weak. So this is definitely a sign that things are stabilizing, but it's not. Germany is by no means is out of the woods yet in terms of their economic slowdown.
Well, it's been a great week with you, Chelsea. Let's continue to follow up on the developments. Thank you for your time and enjoy the rest of the weekend.